It's 10 a.m. in Lagos, Nigeria. That means it's time for Business Morning here on Channels Television. Let's delve into the world of business and have relevant and current conversation. We begin today's episode with Malaysian palm oil futures. It ended higher after volatile trade on Tuesday, lifted by a surge in exports during September 1 to 20th, amid rising demand from top buyer India ahead of a key festival there. We talked about this festival yesterday. The benchmark palm oil contracts for December delivery on Bursa Malaysia derivatives exchange rose by 39 ringgit to 3,739 ringgit a ton and ending a three-session loss. The contract fell 1.86% earlier as traders booked profit. Exports of Malaysian palm oil products for September 1st to 20th rose between 31% to 39% from the same week in August. Indonesian palm oil producers are whittling down their hefty inventory overhang with discounts versus rivals and aggressive sales to India, where demand is picking up for the next month's Diwali festival. Palm oil is affected by price movements in related oils as they compete for a share in the global vegetable oils markets. And global oil prices, crude oil now, prices slid on Wednesday, extending the previous day's losses as investors brace for another aggressive interest rate hike from the United States Federal Reserve that they fear could lead to recession and plunging fuel demand. Brent crude futures dropped 26 cents to $90.36 a barrel after falling $1.38 the previous day. U.S. West Texas Intermediate crude was at $83.74 a barrel. That's down 20 cents. October delivery contract expired yesterday and just down $1.28, while the more active November contract lost $1.42. The market tone remained bearish, and that's because of concerns that the aggressive monetary tightening in the United States and Europe would boost the likelihood of a recession and slump in fuel demand. On the supply side, OPEC Plus producer grouping, the Organization of Petroleum Exporting Countries and Associates, which includes Russia, is now falling a record 3.58 million barrels per day short of its target. That's about 3.5% of global demand. The shortfall highlights underlying tightness of supply in the markets, even as recession fears drive prices lower. And then we come to Nigeria, where the average price of a 5-kilogram cooking gas increased from 4,397 naira 68 kobo in July to 4,456 naira 56 kobo in August. The assertion was made by the National Bureau of Statistics. It noted that the price last month indicated a 1.34% increase from what obtained the previous month. On a year-on-year basis, the August 2022 price was a 101.17% increase over the price of 2,215 naira 33 kobo paid for the same volume of gas in August last year. The report adds that Taraba recorded the highest average price of 4,925 naira 44 kobo for 5 kg cooking gas, followed by Adamawa, where it cost 4,920 naira, and then Lagos State, where it went for 4,782 naira 50 kobo. It also stated that in Katsina, that's where they recorded the lowest price at 4,020 naira last month, followed by Ogun and Yobe at 4,057 naira 14 kobo and 4,078 naira 46 kobo. Many stakeholders, including importers and agents, as this is expected to drive a further increase in the cost of vehicles and other products imported into the country. Well, still staying in Nigeria, the House of Representatives has proposed a bill to repeal the existing Investment and Security Act 2007 and enact another to establish the Securities and Exchange Commission as the apex regulatory authority for the Nigerian capital market. Speaking at the submission in Abuja, the Speaker of the House of Representatives, Mr. Femi Gbajabiamila, says the capital market allows for wealth creation, and so proper and efficient operation is essential to sustainable economic growth. On his part, the chairman of the House Committee on Capital Markets and Institutions, Babangida Ibrahim, said that the ISA bill will establish a new market infrastructure and wide-ranging system of regulation in the areas of derivatives, systematic risk management, financial market infrastructure, and Ponzi schemes. Now let's take a breather. When we come back from there, we'll talk about, well, one of the latest issues in Nigeria's economy now, which is the public debts. It came out yesterday, and it's got a lot of people talking. We'll join that conversation after the break. This is Business Morning on Channels Television. You're welcome back. Well, Nigeria's total public debt stock, which is domestic and external debt stock of federal government, 36 state governments, and the Federal Capital Territory has hit 42.84 trillion naira. That's about $103.31 billion. That's for June 2022. This indicates a 1.24 trillion naira increase from what it was in March 2022. At that point, it was 41.60 trillion naira, and the data was released by the Debt Management Office, so we can be sure that it's correct data. Well, what does it mean for Nigeria incurring over $1 trillion naira in 3 months? We have Mr. Marcel Okeke, he's former chief economist with Zenith Bank PLC. Good morning, Mr. Okeke. Thank you so much for your time this morning.
Good morning to you, and thank you for having me this time.
All right, so we see there's been an increase between June and March, an increase of 1.24 trillion naira. Should we be worried? Is that normal?
Thank you very much for this question. Yes, we should be worried. It is not normal, because when you look at the antecedent and where we are coming from, normally we say in economics that borrowing is not the problem per se, but how you deploy the money you have borrowed. To what end? What do you use it to do? When we look at the Nigerian situation, you find out that we're already borrowing to be funding consumption. Okay? We have been borrowing to even pay civil servants' salaries. So to now continue to borrow more in that direction, and for a government that's almost rounding up, we are worried. We are worried. Already, what we are spending to service debt is much more than our revenue. So it's like we're living on borrowed time as a country. So we are worried.
Okay, so I think you alluded to it. We do know that subsidy also gobs a huge part of this money, even though I think a lot of times when we get the news that the government is going to borrow, it's always connected to infrastructural development. But it seems like it's more about subsidy and some other consumables.
You have said it. It's about subsidy and some other consumables. And I have said it. If really he has been borrowing for real physical infrastructure development, for instance, government can borrow and use it to construct roads and maybe put tolls or toll gates along those roads, so that over time, the money is recovered and what is coming in will be able to service the debt and pay up at the end of the day. But this one that we are borrowing for consumption, I mean, it is a journey to nowhere. It's a dangerous journey, really. You know, it's a dangerous journey we are taking by borrowing more all the time.
Yeah, and it looks like we're going to actually borrow more, because next year's budget, 2023, is supposed to be 19.76 trillion. And it has a deficit of over 11 trillion. And out of that, about 6 trillion is a gain to subsidy. Can we really escape this cycle?
Thank you for this question. You know, this borrowing spree and the humongous debt outstanding, to some extent, is self-imposed. It's self-imposed. Because you ask yourself, for example, this issue of infrastructure development and all that, who set target for who? The government decides what infrastructure to build at every point in time, as we speak. So as a government that has few months to live, must we be shouting infrastructure and now borrow Nigeria will borrow itself to debt, for example. So talking about the figures we are putting, it means that running that budget, and I believe will be announced early October, will cause a lot of distortions in the economy, because like it's been causing, especially this year and a few years ago, when government becomes a major player, in the market for raising funds, okay, where the government will be borrowing domestically and crowding out private sector operators, and hiking the interest rate because of government activities, and then borrowing from anywhere and everywhere on the surface of the earth, And when this is being borrowed, it means a lot is being left, a lot of debt is being accumulated, even for the government that will take over next year, always being important. So the government will again raising 11 or over 11 trillion from this economy or from wherever is really not going to be easy. Okay, it's the future of the country that's already mortgaged, So really, there's cause for worry, like we started. There's cause for worry. There's cause for worry. If I were to be in government or part of the government, I will advise that certain things be stepped down. A government that has a tenure of 8 years and has done 7 years plus, remaining a few months to go. Why overstretch things like this? To keep borrowing and borrowing and borrowing so that, the panic is everywhere. Okay? They talk about the revenue being shortfall and all that. Why will it be suddenly discovered? In economics, the long term is very important. So you don't do things on a short-termism basis. Just like the presidential committee on the economy that the president had just set up to be the chairman of that committee. For so many of us outside, that is not necessary. It's a panic measure. More so when the president himself will be the chairman of that committee. The president is also the Minister of Petroleum Resources. The president is also the commander-in-chief. So how is he going to function? In all of this, okay? And so meaning that all those committees on the economy or economic management team in the past close to 8 years have not been functioning well, except he takes over as the chairman of the committee that he set up. So really that's cause to worry. It shows that it's like the government is at its wit's end, honestly. Thank you.
So you would suggest that there should be a reconsideration of the components of the 2023 budget, perhaps to reduce the cost so that they don't need to borrow up to this 11 trillion naira.
That is the point, perfectly. I mean, nothing is cast in stone, Certain things were put together to arrive at those figures, that is flying everywhere, that are flying everywhere. So somebody can sit somewhere and adjust them. Are they playing to the gallery? Who are they trying to satisfy? If the verdict is that the government has not been doing well now, if it is the verdict of the people that the government has not been doing well, is it within a few months that they will now perform a miracle? So I don't know who they are trying to satisfy. In the interest of Nigeria today and Nigeria of tomorrow, I mean, this government should be winding down, mentioning those figures, and going ahead to begin to raise, loans to meet those targets that they set for themselves. Will be a lot of distortion on the economy. It's going to displace a lot of people who also are looking for funds to run their businesses. Let me not go into the issue of insecurity in the land. That's already an existential threat.
So with this increasing debt, and of course now we have already surpassed, our debt servicing has surpassed our revenue, what impact is it having on Nigerians? How is it affecting Nigerians?
The impacts are so many and enormous, because these debts we are talking about have the local and external component. There's also the ways and means, money government takes directly from the Central Bank of Nigeria, operating of money, which is about 20 trillion as we speak. that one has also violated all the rules and regulations guiding CBN printing money. And so when you are raising loan from the global economy or global financial market and raising from the local market, one is that by government operating so seriously and so deeply in the local market, is displacing so many private sector operators who need these funds. That is one. You know, two is that because of the condition of our economy and how much our debt is already outstanding, those who are giving us loans abroad, are no longer comfortable giving us. Instead of getting the loans at a certain interest rate, our own rate will be hiked for us because they have assessed the risk, in the Nigerian economy, and so meaning that the country is getting riskier, a place to as people to lend money to. Okay, and in the eyes of the Committee of Nations or international community, the signal we are sending out, the more we borrow, the signal we are sending out is that really all is not well with the economy. And so when government, portions so much of its income to debt servicing, what will be left to run the economy the way it should be run? That is why even now we're also borrowing to pay salaries, to public servants. So it has gotten that bad, and the more we borrow, we're exposed to debt, and the more we portion the resources to service that debt, like I said, the other urgent demands, are neglected locally. Okay, because even the infrastructure you're talking about, it has become a mere sing-song. Because if you look at it, you see that so much of the money that is borrowed find their way into various private pockets, and that's the level of corruption. Until such humongous stolen funds are discovered, nobody will know that so much of it has gone into private pocket. I don't want to mention this, but at least it's alleged that they removed the Accountant General of the Federation. Took so billions, hundreds of billions. The other one, so many of them like that, being dealt with by EFCC. So really, the money that's being borrowed, are they being deployed into infrastructure development? If you hear this kind of amount and they have actually been deployed to infrastructure, Nigeria would have been heaven on earth by now. So really, let the government focus on winding down. The volume of debt and servicing it is already injurious to the economy.
All right, Mr. Marcel Okeke, former chief executive economist with Zenith Bank PLC. Thank you so much for sharing your thoughts with us this morning.
Thank you very much for having me.
All right, now it's AFEX time, but that's after the break. This is Business Morning on Channels Television. Welcome back. It's AFEX time now, and we notice slight changes on the AFEX activity chart for the week ended 19th of September. We have Chinwe Lemoha from our Abuja studio now to give us details of it. Hi, Chinwe. Good morning.
Hi, Ini. Good morning.
Okay, so how did the market go? We saw that things hardly moved.
Of course, generally there was an increase in the volume of transactions traded and the value of transactions traded on the exchange. So the total value of transactions traded on the exchange, which is equivalent to the total turnover, increased by a factor of 3.33% from 0.12 to close the week at 0.40%. In the same vein, the total volume of 379,315 contracts were exchanged in 209 deals recorded in the week's trading. The ACI, which is the AFEX Commodities Index, remained unchanged at the end of the trading session. AEI, which is the AFEX Export Index, declined by 0.56%. On the volume of transactions traded on the exchange, paddy rice was the most active, with an increase from 293,743 to 641,052 contracts. Maize showed significant improvement from 34,000 to over 600,000. Likewise, sesame increased from 30,000 to 115,000 contracts, while sorghum moved slightly and closed the week at 26,264 contracts. Across the commodities traded, paddy rice was an apparent winner and increased by a factor of 0.89%, closing the week at 279 naira per kilogram, while every other commodity traded maintained status quo, closing the week at the prices for last week. This is by and large what happened on the exchange over the course of the week. For more information, kindly visit our website at africaexchange.com and follow us on social media at Afex Nigeria and Comex by Afex. Thank you for joining us today.
Yeah, thank you so much, Chinwe, for that analysis of the market's activity. Thanks a lot. Well, we're still staying with Afex now, but we're talking about bold actions for resilient food systems. And when we talk about that, what comes to mind is grow, nourish, and reward. That is what Afex would like to look at in this at this time. Well, bold actions for resilient food system is the main purpose of the AGRF for 2022, the largest gathering of agricultural stakeholders to help Africa grow. The coordinated and large-scale action by stakeholders. Remember, we talked about that program. We had our correspondent, Ayola Kazim, there, and we had a lot of inputs from there. But now we want to look at it from the perspective of Afex. And it's good to have Michael Martins, joining us after a while. Hi, Michael. Good morning. Good to have you.
Hi, Ine. Good morning. It's always a pleasure to be here.
Yes. So Afex is interested in AGRF under the theme Grow, Nourish, Reward, Bold Actions for Resilient Food System. What do you believe the key... we do have a lot of challenges facing the food system in Africa, especially at this time with the war in Russia, inflation and everything. But what are those key ones that you see?
Thank you very much, Ini, for that question. And I think in light of the theme, for the AGRF Summit in 2022, I think this is, incredibly important to discuss. Just to give a sense of how important, agriculture is to the African continent itself. Of the population in Africa today, about 60% of that population are smallholder farmers. And if you look at agriculture in terms of contribution to the gross domestic product, agriculture currently contributes about 23%, almost a quarter, to the GDP of the continent itself. So it's safe to say that agriculture is a key, important element of the economy. In terms of the broad range of different challenges and problems that are facing, the Africa food system, they can be broadly categorized into three. The first one is access to market. There's a saying by smallholder farmers in South America, which says, market is the best fertilizer. Essentially, what they're saying is, don't give me money, don't even give me inputs, give me market, give me a market where I can sell, give me a market where I can sell my commodities. And why that is incredibly important is because, that allows for the transfer of value to the average smallholder farmer, right? Because the average smallholder farmer is poor, is very often, faced with having to sell off, the volume that he cultivates incredibly early, so that a lot of the value that gains over the, the period of cultivation doesn't necessarily transfer back to the, to the smallholder farmer. So having access to market is incredibly important for the average smallholder farmer. The second problem that I think is also important to touch on will be the problem of productivity. That is, how do you increase the average yield of the smallholder farmer within the African continent? Today, as it currently stands, the average smallholder farmer is about 3 to 4, even 5 times, less productive than his counterpart, let's say, in Europe and North America. So that's another key problem that, of course, needs, addressing in terms of us even looking at the continent, from a food production perspective. And the last but certainly not least would be, access to infrastructure, right? So as at today, there's about a 15%, food loss for most of the, cereal and grain production within the African continent. And that could very well have been, avoided if we only had the necessary infrastructure in terms of storage and logistics, available on the continent. So those three problems, access to market, access to infrastructure, and then also access to, capital, those would be the top three problems that I think, we tried addressing during the summit, and I think is also important for the continent.
Yeah, well, the issue of storage and preservation speaks a whole volume, because about 50%, especially like in Nigeria, post of our harvest is lost. The post-harvest losses. So it's actually a big problem. So in the light of this, what actionable strategies does AFEX see to curb some of these major challenges?
So generally speaking, I think it's safe to say in terms of short-term, actionable strategies, I think the most important thing would be the entire ecosystem needs massive investments, right? So in terms of access to, let's say, capital in the form of inputs and fertilizers and seeds, first off, we need, significant, massive investment in research and development to help improve, the quality of seeds that come out from our research institutions, so that can help increase the volume of our production on a year-on-year basis. As at today, Africa would need to increase its hybridization rate, by 6 times just to measure up, with what the global standard is. And in terms of even fertilizer application itself, Africa would need to increase their fertilizer application by 8 times, just to get to what the global, standard currently is. In terms of access to infrastructure, as at today, if you look at the way the nature of the commodities market within the African continent, most of that cultivation itself is seasonal. So there needs to be, massive investment in irrigation so that we can produce all year round. According to a McKinsey study, Africa would need about $65 billion, in irrigation just to increase, our production volume on a year-on-year basis. And even beyond that, we do need massive investment in storage, as I've mentioned earlier, but not just any type of storage, right? So if you look at the Nigerian, agricultural food landscape today, there's a claim that we have 1.6 million tons of storage, but most of that storage is not near, farmer locations, which is essentially what is needed in order to prevent that post-harvest loss. So there needs to be either a redirection in terms of, the type of investment that we're making in storage, to help prevent more, post-harvest loss. As of today, it's at 15% for cereals and grains. At AFEX, that number has been significantly reduced to only about 1 to 2%. In terms of access to market, I think what we are doing in AFEX currently today is incredibly important in terms of the exchange infrastructure, helping to facilitate trade, between the smallholder farmer and the processor. And what that does significantly today is that it removes all the middlemen, the traders and the merchants, that essentially increase, quote unquote, the value of the commodity for the end buyer. So if you can connect those two parts of the market, both the sell side, the smallholder farmer, and the buy side of the market, you can essentially transfer more value between those two participants, which is what, primarily the exchange does. And I think also technology would also be important to mention in terms of providing access to market, because as at today, what we are able to do on the exchange is we're able to structure different financial products that will encourage, the infusion of capital, into the commodities landscape. Historically, access to, capital has been incredibly difficult for the commodities ecosystem, historically less than 5% from commercial banks. As at today, due to the type of financial products that we're able to design on the exchange, there is an influx of a whole lot more capital into the system. So those top 3 things I think are some of the, short-term actionable strategies that we can leverage on in order to, increase our agricultural production volume as a continent.
Yeah, it sounds like AFEX is already working on systems or ways to create inclusive and sustainable, resilient food system on the continent.
Absolutely, 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 absolutely. And we can go on and on about, the work that we have done. As at today, we've provided inputs to more than 200,000 smallholder farmers. Out of that, we have almost 500,000 smallholder farmers, on our system alone. In terms of access to capital, we've, spoken at different points in time with regards to the number of inputs and fertilizers that we've given, to smallholder farmers, and even also the amount of money that we've been able to raise from the capital market. I think as at today, we will be bordering on, $100 million in terms of capital raised, that is being transferred, between the different participants on the exchange. And that's an incredible sum of money, considering that, historically, funding to the agricultural sector has been less than 5%. And even at that, most of that funding still, tends to come from, let's say, the federal government or even some other public institution like the Ministry of Agriculture. In terms of access to market, we do provide that exchange infrastructure, like I mentioned before. But what we are also trying to do today is trying to, empower other small and medium-scale agricultural entrepreneurs so that they can provide the same solutions, to either to the smallholder farmers on the sell side or even to processors. And as of today, we are, for all intents and purposes, the largest provider of storage as a service in the country. So it's safe to say that, across these different thematic problem areas, AFEX has been providing solutions, and we will obviously continue to provide solutions across those areas.
All right, Michael, thank you so much for that, and we wish AFEX the very best.
Thank you very much, Ini.
Let's take a breather, and then we'll be back to the markets. We head back to the markets now, and not the AFEX market this time, to the money markets in Nigeria. And we have Aniti Edet joining us. Hi, Aniti.
Yes, good morning, Ini.
I don't know how the market came back yesterday.
Just call it a flattish positive rebound, because we just
it has a tone of green.
Yeah, yeah. You can say not just on the index, also sectoral performance. It was mostly in the, well, it was mixed. Then activity was mostly in the green, except for the number of deals.
Would it be people buying the dip that we've been having? I mean, we've had like 7 days in the red.
No, I wouldn't really call it people buying the dip. The market is still suppressed. You understand? It's
but
more
people might just want to make most of whatever is available.
Yeah.
And so if I see that a stock I've been eyeing has dipped, even if it's a little bit...
The cherry picking.
Yeah, cherry picking. Then
exactly.
I might just decide, oh, this might be a good time, and then I watch and see, once it has a little bit of breathing space, I head out again.
But don't forget, also the macroeconomic environment is also a point to consider when you're making your investment.
Obviously.
Okay. So now, with that being said, let's turn our attention to the fixed income market, which, of course, it was basically quiet for the fixed income market. Take a look at the bond space. Average yield there, it closed flat at 12.6%. But when you take a look at the board there, the highest concentration was on the 18th of April 2037 paper, which had 4 deals, and the amount staked there was 2 billion naira, cumulative 3 billion naira, so it was the major contributor to that board. And then at the same time, crossing over to the Treasury bills market, the highest concentration was on the 7th of September 2023 paper, which had 4 deals worth 15.25 billion naira, cumulative 17.25 billion naira. Over to the, that's the OMO market there, highest concentration, 20th of December, later this year. And then the total number of deals carried out at a value of 16.43 billion. Don't forget, earlier in the week, we had a bond market auction, the federal government auction through the Debt Management Office. So there was a debt auction by the DMO on 3 instruments. So we will be talking to Samuel Bameke, analyst, to give us more insight on that. So Samuel, good morning, Samuel. I hope you're there with us. He's joining us via Zoom. He's an analyst and lead fixed income research at Meristem Securities. Thank you for joining us, Samuel.
Good morning, Aniti. Thank you for having me.
There's quite a lot on the pot, or on the plate, if I would put it. First of all, you have the federal government's bond auction. On one side, last week you had the inflation report, which shows that Nigeria's inflation has risen to 20.52%, the highest in about 17 years. And then at the same time, you have multiple or coordinated or syndicated interest rates decision this week. Tomorrow, South Africa. Today, the Bank of Japan. Today also, the US Fed and so on. So now, how is all this playing into the fixed income market, domestic fixed income markets?
Okay, thank you, Aniti, for having me. Yesterday, we saw the the DMO, raised about 229 billion at the bond auction. And that was at 14.27% higher than what we saw at the last auction. And then we saw rates on the 2025 instrument move by 100 basis points to 13.50%, and we saw rates move on the 2032 instruments by 35 basis points, and also rates moved on the 2045 instrument by 50 basis points, to about 14.50%. I mean, this is the movement in rates is flowing in line with our expectation, for the fixed income market, and the factors that have been driving that are not far-fetched. Number one, investors are demanding for higher rates, looking at what the inflation numbers are doing. Last week, we saw the inflation reports. We saw inflation report from the MBS, and our inflation moved to about 20.52% last week. With that in mind, investors are trying to, demand for higher rates to compensate for real returns. And we also discovered that there has been naturally, a liquidity squeeze, since the beginning of Q3, there's been a liquidity squeeze. And then, if you look at the government, the amount of deficit that the government have, to finance this expenditure, we discovered that the government has been more attuned to raising funds from the domestic debt market. And that's because the international financing window, the external debt market has been, at this time, it's expensive to actually raise, Eurobond at this time, given the hike in rates across advanced market and global economy. Before I move to what's happening in global economy and how that is impacting the fixed income market, if you look at inflation numbers, you see what core inflation is doing and what food inflation is doing. Despite the decline in global prices, of global food prices, we have not seen it, flow into the Nigerian market, and that's as a result of the structural challenges we are facing in Nigeria as regards insecurity. And also, if you look at the oil markets, despite the decline in crude oil prices, that has not actually flowed into our market. Locally, diesel prices have been high, import costs have been high, and then that has actually, impacted that has caused more inflationary pressure to us here in Nigeria, which is why you see investors demanding for higher rates at the bond auction. Now, if you look at across advanced markets and across global economy, you see that the monetary policy tone has been a hawkish stance, across advanced markets.
Samuel,
you look at the US Fed, you look
Samuel,
at the banks, even the ECB. Even the ECB, if you agree with me that the tone has been too high for it. Can you hear me?
Yeah, I can hear you. I think time is not really our friend at the moment. But I think we've gotten an insight of your analysis, and then we will keep our eyes out for the MPC meeting and the market reaction next week. So thank you for that analysis. That was Samuel.
Thank you for having me.
That was Samuel Bamike, lead analyst, lead at Meristem Security, the fixed income arm of that house. Now, that's the market. It gained 3.22 billion naira at the close of Tuesday's trading session, up by a blip, just 1 basis point, 0.01%, and that's thanks to gains by First Bank as well as Zenith Bank. But then the market breadth was negative, 11 gainers against 12 losers. When you move over to the sectoral performance, to the activity was down, was up. Value was also up, but the deals was down by 1.86%. Now, over to the sectoral performance, there you have it there, quite kind of a mixed picture there. The banking sector was a major reason for that 0.01%, and as well as the insurance sector. So, that's how the market closed on Tuesday, but then we will be looking out for today's closing figure at the Nigerian Exchange.
Obviously, I know we'll be following that to bring that report later on. Thank you so much, Anita. We'll head to London next, but we'll take a breather first, and then we'll be back. This is Business Morning on Channels Television. Welcome back. We head to London now, where Juliana is back bright and, do I say early? Juliana, good to see you. The ceremony is over. We are now back to the reality. Good morning. And one reality is, I saw research saying that some Britons are giving up meals to keep the bulb on, tell me that's not so true?
Good morning, Innie. It's great to be back with you. I've missed our chats, but unfortunately they are going to remain pretty depressing. And this is some pretty depressing stuff that's been released by Opinion. They have conducted a survey basically looking at how Britons are coping with the cost of living crisis. Yes, that does still exist in this country, and they have found that 5.6 million people are skipping meals in order to survive. They are not the first to reveal that. There has been lots of surveys conducted by the Resolution Foundation, other think tanks, as well as charity groups and the opposition Labour Party. And it comes at a time where government business is back up and running. Liz Truss, the Prime Minister, is at the UN gathering in New York. But there is going to be a mini budget. We're expecting a mini budget on Friday. This is the first time we're going to be hearing from the new Chancellor of the Exchequer, Kwasi Kwarteng, as he outlines his solutions to the state of the British economy at the moment. So yes, pretty shocking. I think a lot of people did breathe a sigh of relief when the day the death of the Queen was announced. Just earlier that day, Liz Truss did mention this energy price plan, which is essentially a freeze on bills. We know bills are not going to go any higher than £2,500, but for some families it's just too little too late. They cannot wait until the 1st of October, which is why these results are so shocking.
Yeah, it is shocking. And then the rail workers are back on the strike.
Rail workers are back striking. ASLEF, which represents drivers, and the RMT union, which represents within this ballot guard workers and people that work on signalling in trains. They are going to strike. Some combined, some not. I think ASLEF is striking on the 1st of October, which is a Saturday, Nigerian Independence Day. For our viewers in the UK, make sure you check before you travel. And they're also going to be striking on the 5th of October. Same issues, not happy with pay not keeping up with inflation, which is currently at 9.9% in this country. Working conditions are a big issue for train drivers as well. I know that as we transition from this tech era into more tech, driverless trains are on the table. They're not really happy about that. They don't think it's going to keep passengers safe. So they are going to strike, and they've done it so it does coordinate with some big events. There is going to be a North London football derby, Arsenal versus Tottenham. That's going to be a big issue for fans trying to get to the stadium, as well as the Conservative Party conference. This is the first time we'll see Liz Truss speaking to MPs in her comfort zone. But there are going to be strikes which are going to kind of overshadow that. Let's see if the Transport Secretary is able to resolve it before then, but it does seem like it will be going ahead.
Yeah, well, the U.S. was able to avert that. So I would hope that they can do something. Thank you so much, Julian. I will see you at 1:30.
Yeah.
All right, now it's time to go to the crypto space and see what's happening there. Doesn't look like the sentiments are any different from what's going on in other markets. After all, the reality hits everyone and hits every market as the dollar increases in value. Markets like the crypto go the other way. Gold, oil, they go the other way. So the market is still in extreme fear, and we see that the number this morning is 23. So it's still extreme fear. Not a lot has changed. In fact, it seems like the market is even going down even more than before. And then if we look at the market cap, we see it also dropped by almost 2% at $916.99 billion. 24-hour volume also dropped almost 5%. Where do we get Sucker here? We're looking for Sucker at 67.88 billion. Bitcoin dominance is also down. Yesterday, at least we had 39, but now it's 38.38, and that's down 0.24%. And then when we look at the price of Bitcoin, there you go. 18,861.28, and that's down more than 2% 2.39%, and 24-hour volume also is 35.19. We see the price of Ethereum. There you go. We're looking for sucker. Everything is minus 1,326.70. 24-hour volume 14.30 billion. And then we have Olumide Adesina now joining us. Hi, Olumide. Good morning. Good morning, Olumide.
Yeah, good morning. Thanks for having me.
Yeah, good to have you, Olumide. So, well, we're complaining that the prices are dropping. It seems like some people are making the most of it. One of it is MicroStrategy. They got 301 Bitcoin yesterday to increase their stock to 130,000. But already books say that they're losing on the book. They've lost about $1 billion. You know, so is this, I don't know, what strategy do you see here from Michael Saylor?
Yeah, usually institutional investors increase their position in the bear market because you often get the best value at discounted prices, and that is really what MicroStrategy is doing. But it's fair to say the crypto market is in troubled waters. The US Fed will definitely announce a 75 basis points interest rate hike this evening, and that probably will put a lot of pressure in the crypto market, especially his comments that will look like more hawkish narrative based on the fact that inflation doesn't seem to be moderating in the world's most powerful economy. Secondly, after Ethereum's proof of work switch from proof of work to proof to stake, the United States Securities Exchange Commission has started questioning the model. And one of the recent reports are that it's saying that Ethereum might likely be classified as a security on the fact that jurisdiction and the business model where validators instead of miners control the ecosystem. That also weighed on the crypto market. So the sell-offs has really been a matter of how long will it last. But right now, it's very unlikely for us to see Bitcoin staying above the $20,000 in the near term, except we see the US Fed sounding dovish after the interest rate hike decision.
So we can expect that institutional buyers, such as MicroStrategy, will keep at this, knowing that they are long-term, and then individuals can take a back seat for now.
Yeah, it's fair. Yeah, because you need to look at the fundamentals backing Bitcoin as an deflationary asset. It has fixed supply, and the way you're saying it definitely means that the matter of time Bitcoin would stop being in production. And also the fact that few entities have such positions means that price manipulation and price upside during era of cheap money might push the price of Bitcoin. So it's a wise decision for MicroStrategy, but the net term shows that, like you rightly said, that there are losses, and that could really escalate because it's not really a wise decision for you having so much exposure in a single asset where the bear market is very supreme. But like they say, those that take the risk usually get the most of the reward. But right now, the market is really punishing risk takers, right?
Yeah, Olumide, thank you so much. Well, I guess, as you have said, it's only those who have the heart to take the risk that can make the money. So investors should take the... Thank you so much. Enjoy the rest of your day. Just before we go, can we see the top alts by market cap and see there? So it's the reality of our time. I don't know how XRP managed to get out and went up by more than 5%, but obviously all eyes are looking out for that rate hike, which is expected, and we know once that goes up, even before it goes up, the dollar gains, the market falls, and that's the trend that we've been seeing. But that's it on the program. Thank you so much for being a part of today's episode, the midweek edition of Business Morning. We'll have tomorrow again, and then we have Friday. But I'll see you at 1:30 for Business Incorporated. We'll give you an update from the world of business. Do join me then. I'm Ini John Mekwa.